Okay, everybody, here we go. It's me, Gregory Mannarino. It is Sunday, February 12th, 2023, and this is my newest segment of Markets A Look Ahead. Very appropriate because I want to address something that seems to be a concern to a lot of you as of late. Now, let's talk about that. We've been hearing some pretty, I don't even know what to say, lofty people out here, and even a couple of Wall Street banks warning about a market crash or some event that's going to occur imminently or very soon that has the potential to hit this stock market hard. Let's start off with Michael Burry real quick. I've addressed these things, but this guy has a pretty big following, it seems, and a lot of you are concerned about an imminent, meaning now, market crash because of what Michael said. Now, I've addressed this, but let's talk about it real quick. Michael Burry, smart guy. Honestly, made one of the best calls in the history of this freaking market with the subprime market meltdown. Now, he's saying that there's going to be an imminent crash or an imminent drop in the stock market, which could be substantial. Is the man wrong? I've said right here in this blog, I think his timing is off. Okay. Now, with regard to that, we've been watching an interesting phenomenon occur as of late, and you know what I'm talking about. It's this sell-off in the global debt market. Bond yields are rising, and it's affecting the market in a negative way. We also have the relative strength of the dollar playing in here, getting stronger, also not too pretty for the market. Crude oil, all right, it's getting a bit higher here, but let's back up a moment further. Last month, January, was a pretty epic month for this market. Higher, 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 higher. Is the market due, I hate to say that word, due for a pullback? Maybe it is, okay, but the issue I have with, let's say, Michael Burry here, okay, is, first of all, he's not giving us a clue as to what he's talking about or why. It's the driver of the market that matters. It's the debt market, period, the end. Okay, right now we're seeing some issues here. Do I believe, or do you believe, and I want to hear from you, that central banks are going to do more? Do you believe they're going to get in here and buy more debt? That's what I've been explaining to all of you. I think they are. In fact, I'm going to go out on a limb here again. I'm going to say they are going to do it. They're not done, in my view. That's my thesis, is central banks are not done inflating. Central banks are not done acquiring assets. Central banks are not done creating dependency on the system. They have the world by the throat right now, central banks. They have the world exactly where they want it. They have a global economy that is in free fall. It continues to collapse faster. In an environment where they've gone out of their way to create inflation. So think about it. It's a double whammy here. Economy contracting, inflation continuing to rise, the citizenry of the world, the middle class, continuing to struggle more and more and more every day, taking on larger and larger debt burdens, which is their goal, to create slaves to the system. So looking at Michael Burry here and his imminent, this is a couple of weeks ago here when he said it, market, drop, telling people to get out. Okay, I can understand why he would say that. Okay, looking at what's happening recently in the global debt market, understanding the situation here with a cratering global economy, with inflation continuing to rise, although at a slower pace. So we're supposed to get down on our hands and knees and praise central banks for raising rates, charging more for the debt that they're issuing. Imagine this, honestly. Central banks got every base covered here, collectively, and they do coordinate a stunning admission that we heard right out of the mouth of Yellowstain himself, who initially said they don't coordinate, but now he admitted that they do. Duh! I think that's a no-brainer here. So that's just with regard to Michael Burry. That's why I am saying the man's timing is slightly off. Could we see, going back to what I said, this market drop 10, 15, 20% in the short run? Absolutely. But that's normal. That's normal action here in the market. If you were to look at, for example, a 1-year chart of the S&P 500 for you technical analysts out here, you will see the 50-day moving average is way above the 200 here. That's a sign that, well, it's bullish, but it doesn't mean this market can't drop a little bit, which in this environment where we just had a rip-roaring January would be longer-term bullish. Ha! What's the fly in the ointment? The debt market, yet again, the driver of everything here. Central banks must act, and they have to act now to bring down global bond yields. We're going to know real soon how ugly this is going to get. The MMRI is almost 241. We are 9 points away from the first line in the sand, which is 250. Pay attention to this, okay? You want to know what's going to happen? Follow the MMRI. Link in the description of this video. Free to everybody, okay? I don't charge a dime for it because I want people to pay attention to this. We're pretty close to that first line in the sand at 250, okay? Remember the last time it happened. And the last time we crossed 300, all hell broke loose. Now, let's talk about Rickards real quick. And then we're going to move on to Morgan Stanley and Bank of America so we could gain a perspective because this is markets a look ahead, right? Jim Rickards, okay, another smart guy, big following. A lot of people like him. Some people don't, but that's okay. You can't please everybody. Rickards is saying 6 months from now, when people, this is his thesis, when people realize that we're in recession, the market's going to tumble. I've been explaining that the faster the economy craters, the higher the stock market's going to go. I've shown you this gap. I've done this exact thing for years, explaining the stock market and the economy. Understand? Okay. This gap is going to get bigger and wider and wider and wider until it doesn't. And when is that until it doesn't? When we see global bond yields rise at an uncontrolled pace. Now, again, going back to the debt market, what are we seeing? Global bonds rising. It's alarming. It's concerning. It doesn't mean that we have to run for the hills yet or anything like that. So, I mean, these are elements or dynamics that I'm certain that people like Jim Rickards is looking at here. Michael Burry is looking at here. I don't believe anyone can predict, I really don't, a moment in time, let's say several months out, by looking at a technical chart. You can't do it. Too many things could move around too fast. I know Jim Rickards is kind of big on the whole currency collapse thing, and he's 100% right. He's 100% right here. Central banks are deliberately destroying their currency. They're sucking the purchasing power right out of it, and that's massively inflationary, as we know. So, okay, we're keeping our eye on that too. And if you look at the MMRI, that's why I use the Dixie, or the relative strength of the dollar, in the equation here to calculate the MMRI, which is a real-time risk indicator. Understand? Anyway, so with that, could Jim be right? He absolutely could. But we have to watch, again, what? The global debt market, which is the driver of this entire thing. Let's move on to Morgan Stanley now. Morgan Stanley put out a warning here. Their warning was there's a massive disconnect between what the markets are doing and the economy is doing, and there's going to be a problem moving forward. Absolutely. Is this news to you or I? I don't think that's news to you or I at all. This is exactly what you and I have been watching for years. This massive, this insane disconnect here. And then we got Bank of America warning of a day of reckoning. Yeah, we got some pretty incredible warnings as of late. But what does it mean for you and I? Does it mean that we should panic, that we should run to the hills here, that we got to go run in some corner and suck our thumbs? No, I don't think so, okay? We got to keep cool. We got to raise our awareness. We got to pay attention to what's happening. That's what we got to do. It's not going to change what you and I already are doing and what we already know. We're going to bet against the debt, become our own central bank, hoard hard assets, physical gold, silver more specifically here. I still think you should stay long the stock market until we see, again, the uncontrolled sell-off start to spike in this market. Again, I'm long this market. You all know that. I've also been trading this market like a maniac as of late, using my very brand new trading system. Again, I'm not selling this. It's free to everybody. I'm not saying, hey, everyone, you're going to go out and buy my new trading system, duh. No, then people say, oh, look at Greg Mannarino. He's trying to sell this. I'm not trying to sell nothing. I've given this stuff away. I'm giving it all away. If you subscribe to my free newsletter, you got not one, but two brand new trading systems, which I've given away to everybody that you can use. I've been using my second one here. And in fact, I'm working on another one too. And once I get that worked out, I'm going to release that for free as well. So I've been taking advantage of this market fluctuations day to day, a lot of volatility here, and why does not take advantage of it? I've been long the market, I've been short the market intraday multiple times. System is doing pretty damn good. More than 70% of those trades are working out for me, and I think that's pretty good. Anyway, look, that's really the story here. Looking ahead, I wanted us to consider Michael Burry's calls, Jim Rickards' call a few months from now, the statement from Morgan Stanley about the disconnect in the market. I mean, come on. You got to be brain dead not to realize that's going on. And then Bank of America just, I think it was Friday, talking about a day of reckoning. A day of reckoning. Yeah, a day of reckoning is coming, and it's going to be worse than Morgan Stanley or Bank of America can possibly understand. But why are these warnings coming? Because they know they have to cover their rear end, so to speak, to say, hey, we told all of you so. If you didn't want to listen and get on the phone with your broker or whatever, or whoever represents those banks and maybe, set up your portfolio in a more defensive manner, well, then it's your fault. You see what I'm saying? But then what are they going to do? These same institutions are going to bet against their own customers. Anyway, so I was just writing down a few things today. Right now, the 10-year yield is sitting at 3.73. Let's keep our eyes on that. Okay, Dixie, 103.58. Dixie, relative strength of the dollar. And as I said, MMRI, just over 240. In fact, 240.6. You could forget about the 10-year yield. You could forget about the Dixie or the relative strength of the dollar and just focus on the MMRI because that's baked into the equation of the MMRI. And I'm telling you again, I said this on Friday, I believe, if we cross 250, we're going to have a problem, okay? We're going to have a problem. I'm not saying there's going to be a crash here because, again, look, a 20% drop in the market from where we are today, right now, as we closed on Friday, would be normal. Markets go up and down. But if you look at the longer term trend of the market, it's a random walk with an upward drift, and it's pretty much always higher. Until we get these big crashes, which are substantial because they happen so rapidly. Remember how this works. Fear and greed drive the market. Fear is stronger. When people get excessively greedy in the market, you see the stock market rise, but at a slower pace. All of a sudden, we get this massive drop as fear takes over, and everyone runs for the door at the same time. That's why people get all worked up about these things. But understanding how markets work, it's kind of like, an escalator ride up, and then the floor drops out when you get these massive fear escapades in the market. I think most of you already understand that. Look, like I said, we're in the right spots as far as I can see right now. I'm trying desperately to keep you in all the right spots here. You understand, at least I hope you do if you follow this blog, the dynamics in the market, how cash moves through the market, how eventually this is going to play out with the debt market meltdown, which is going to crush global stock markets. Cash is going to move into commodities because they are real things. So we're set up there. Again, I've explained that you need exposure to commodities, gold and silver, my favorite of them all, but there's no reason to look at other things like energy. I think energy is going to be a spot we need to look at and be involved in down the line. There's a lot of exchange traded funds that give exposure to this. Don't expect to buy an ETF or a company and instantaneously you can start making money here. What we're doing here, look, you want to invest for the longer run. You want to be able to take advantage of where you believe, and you should always do your own homework, things are going to go for the long run. But in the shorter run too, again, I put together these few intraday trading systems. there's so many ways to take advantage of all this, and trading is not for everyone. Believe me on this one. It really isn't. Sometimes, and I had to get out of it for a while because I couldn't stand it. The swings in the bankroll are pretty incredible. But if, like I said, I'm trying to zero in on a couple of new systems which can give us better signals. Anyway, just a real quick reminder: starting tomorrow, Monday, I am not going to do my midday live report anymore. Instead, I'm going to do a morning pre-market report as I always do. We're going to skip the midday live one, and I'm going to do a live stream post-market. Okay, so that would be like 1:05 p.m. Pacific Standard Time or 4:05 p.m. Eastern Standard Time. Remember to not just subscribe to this channel, but hit the notification bell, the notification button, so when I go live, you'll get notified. Okay, and I'm gonna put that out about 15 minutes, maybe even longer, maybe prior to me getting out here, so you'll get notified, so you can get involved in this. And I want you to have questions ready for me. All right, I don't want to sit here and just blab and blab and blab and blab. Again, I want this blog to have value to you, actionable information for all of you. It's so important. I think look. We can't let the system beat us. We're not going to let it beat us here. They've rigged it against all of us, but we can turn the tables. For every action, there's a counteraction. So let them play their games. We're going to play our games as well. You know that. And I don't think we could be beat in the long run. I really don't. If we just stick to our plan here, understanding the dynamics behind this all and staying ahead of the curve. That's really it. And right now especially, keep your eyes on the debt market. Keep your eyes on the debt market. Watch the MMRI. Every day, honestly, if you follow this blog, you should be looking at the MMRI at least once a day, maybe morning and night. And again, what do you got to lose? It's 100% free. Link in the description of this video. Follow the MMRI. Let's watch risk in this market. Let's see where it goes. Let's see what happens if we go to 250 with regard to the MMRI, or we go lower from here. Let's see what happens. We're going to be able to see this again in real time. And it's going to be reflected in the market. Anyway, with that said, look, long video this morning, but I wanted to cover these things because there's a lot of people asking questions. Hey, Greg, what do you think about Michael Burry? Well, what he said. What do you think about Jim Rickards? What he said, Morgan Stanley and Bank of America. And well, now I think, at least I hope so, this has answered a lot of those questions. And I do want to hear from you, as always, okay? So please share the video. Get it out there. I'll see you in the morning, all right? This guy loves you a lot.